Hey, what's going on, everybody? Happy Wednesday. It's 6:30 a.m., June 17th, and I'm going to do a quick Bitcoin and crypto analysis for y'all. So, price of Bitcoin currently at 94.98. We've kind of been hovering around this $9,500 area for the last almost 24 hours or so. I guess a little over 24 hours. I think for the most part, the fact that price was able to reclaim this June monthly open was definitely a positive sign. Okay. So if we're just looking at technicals in its simplest sense, you know, it, it's technically good that we're maybe forming somewhat of a pennant-like structure right here. Okay. Because if you're forming a pennant above the previous resistance and you actually start to break out of the pennant, then you have a target to the upside. So this is your pole right here. Okay, so you take the target right there, measure it out, and that gives us a target of about 10,257. So that's a pretty good looking, pennant in my opinion. However, if we start actually looking inside the pennant and dig into it, there's something really interesting happening, which is that, we could be seeing a potential, head, left shoulder, head, right shoulder, double right shoulder, like a complex head and shoulders pattern. I don't know what to give more credit, to be honest, because this is a potential head and shoulders developing pattern. If we start breaking above this marker, 95.30 or so, which is the high of these two tops of the right shoulders, then I'd say, okay, this is probably invalidated, and I'd give more credence to that bullish pattern, which was the bull pennant. But for now, I think both are in play. And the fact that, we're kind of just hovering around this June monthly open, as well as if you look over here, we're hovering below this high volume node. Remember, as I've explained before, these high volume nodes, this big black bar sticking out, and then this red bar that goes across price, this is the point of control. So typically, above it, you can make the argument that things are more bullish. Below when price is below this black bar, as well as this red marker right here, that means we're probably more bearish. So in present circumstances, this is more bearish because price is under it and we're not able to break above it. Every time we've tried to break above, we've gotten rejected pretty strongly, right? So one could make the argument that until we break above that area, we're not really bullish yet. And that makes sense because that is the downtrend line of the pennant that I was just showing you earlier. It's kind of like, this little trend line right here. Or if I could draw a little triangle right there, we could draw it something like this. Okay, kind of like that. That's your little pennant that's, developing, but no breakout confirmed yet. So we can make the argument that under that red marker, we're still more bearish than we are bullish. Now, I also stated that this is the larger downtrend resistance, block, you could make the argument. All right, so if we move this over here, let's just say we went straight up today, okay, you can make the argument that, okay, well, we could still hit this green block right here, right, and then start to roll back down. Why? Because this has been previous high right there, and then lower high right there. So we have a block or trend line resistance that's coming down in a range, basically. So my thoughts are that, yes, we could push higher, but we need to confirm and break out of this descending channel as well as this descending trend line block. Until then, it's very hard to say that we're going to do anything, spectacular from where we are, okay? The momentum, I think, still goes to the bears because after creating this high, this low, then we put in this lower high, we actually put in this lower low. Technically, you could make the argument that this is also a lower high and another lower low. So the confidence is more so given to the bears because they've already established the structure of the market. The bulls are trying to create a more bullish structure by creating a bull pennant, and trying to figure out if we could break up from here. Now, if we start looking with the pivots, okay, so let's throw on the pivots right here. You can see we've kind of hovered up and down, above and below the pivot multiple times over the last day or two. So we're trying our best to actually break above it, but every time we do, we kind of get pushed back under. So it seems like there's really no defined, winner or loser in this area. It's more so both the bulls and the bears are trying to figure out who's going to win out on this battle, right? Because remember, these pivots are nothing but key support and resistance levels that are mapped out in a simple fashion. And so if you can't stay above the pivot, that means you're not particularly bullish. And if you can't stay below the pivot, you're not particularly bearish. So it's as simple as that. If we're looking at the Bollinger Bands, and again, Bollinger Bands help you understand the volatility and activity of the particular asset when you throw on these Bollinger Bands. And so we're actually on the upper half of the Bollinger Band. So upper half of the Bollinger Band more or less is positive. Lower half is more or less more negative, right? Or I guess more bearish. Staying above this yellow band and finding support on it is typically a good sign. Whenever you can do that, you can aim, towards the highs of the ranges of, wherever you've gotten the candle spread. When you're below that, you can again, aim at the lows of the ranges wherever you have the candle support. Okay. Now, if we check out the daily, all right. So the daily also has not done anything spectacular. So remember when we were having this big drop down and I told you guys this grind back up is probably going to be bearish, and we finally had this big drop down, right? I think it's the same thing that's happening here is we're having this slow grind back up. We might have it for maybe another day or two, and then possibly have another big drop down. Oops, let me get rid of this. So, obviously before that, we still have to break through some key levels, right? First thing being that 4-hour support that I just showed you, okay? And the interesting thing is, the 4-hour support also happens to be just right around this June monthly open. I found it really interesting that when price actually went way down here around 8900s, we pushed back up above the June monthly open. This is a key level because this was all previous, support, and then we finally smashed through, used it as resistance and got sent lower, but then reclaimed this June monthly open again as support. And you can see we haven't really closed significantly below that June monthly open once we sort of broke up through it. So in my opinion, I think this is a positive sign that we're here. Once we start getting that follow through, I would probably say, at best we make it to 9,700 at least. But then from there, it's kind of like iffy because that's where you come into this zone, right? Either you reverse from this area because this still is a descending trend line zone, or you start breaking up through it, which then gives us the upside targets towards this consolidation block right here around at least 10,070 all the way to $10,200. But all that remains to be seen because we're kind of just consolidating here. Nothing really is telling us we're going to move up or down. Obviously, like I said, the strength and the momentum is on the side of the bears because after this key high, we've made it clear that we put in this low, lower high, lower low, lower low, lower high, and another lower low. So it's possible that we kind of continue that and push another move down. Okay, and if that does happen, let's just say if you're looking at this bottom trend line resistance area or trend line support, you could look at it two ways. You could look at it kind of like this, like that. So from here, we would get pushed down to at least 88.60. Or if you want to look at it kind of like this, where maybe it's something like that, touching this trend line, then you're talking about 87.50. I don't really know if this bottom channel is useful because it's only one touch down here, but the top is definitely useful. Okay, so 88.50 or 87.50 is what I could see at least us coming down towards. Now here's the thing. Okay, that also matches up with our high volume node area right here, which is pretty much right around the area where this wick came down towards, found support, and then pushed off. Now the interesting thing about that is if you come down towards it again, there's a chance that you might break it. Because here's the thing, you've already touched this once, twice, now 3 times, right? Because this is all previous support. So if this is a low, your higher low, your higher low, you do not want to put in a structurally lower low than this key area or this key area. So if we do, let's just say something like this, where we pull down and then put in a higher low, I'd probably say that's more bullish, especially if we can start pushing up and out of this channel. But until that happens, I'm still looking at this more local structure as a little bit more bearish. I'd say the larger developing structure, if you're just looking at it at face value, yes, it looks like an ascending triangle that could potentially break up. But as I've stated before, right at the tops of the ranges, you've seen pretty significant volume come in right at the tops of the ranges, right up here or even over here. And this is the key significance of understanding how distribution works. Distribution comes at the top because big players are letting go of their positions right at the tops, or big players are creating or generating FOMO, where retail gets stuck bailing out, or I guess taking the Bitcoin out of the hands of the bigger players. Because remember, retail does not move markets, right? They're there to sort of FOMO in and add to the already momentum that's generated by the bigger players. And so when you see this kind of FOMO right here, most of retail was starting to go long. And I think I had told our members that this is where you probably want to short. Okay. So fact of the matter is, when you see movement like this, you got to understand what is the purpose of it. Is there volume to support it? Are we having an actual breakout, or is this, possibly just another fake out to the upside? These are all important things that you want to keep in mind. Another confluence to my whole distribution theory is yesterday I had a chat with Ki Young-ju. He's a gentleman from South Korea. He is the CEO of Crypto and that's this website right here, cq.live. And so in our interview, we talked about all the different metrics that they have developed and tried to understand what is the importance of looking at the inflows and outflows of Bitcoin, who's moving what. And I think the one kind of conclusion that we came to is you want to pay attention to what the bigger players are doing when it comes to exchange inflows. So for example, Bitcoin, large amounts of Bitcoin being moved onto the exchange. And so the one thing that he stated that we've seen over this movement right here, which is this whole thing that you see, is we've actually seen big players have 1,000+ Bitcoin move to the exchanges to sell over here, over here, over here. And so what that tells you is, well, if bigger players are selling, who exactly is buying, right? I mean, yes, it's possible that there's much bigger players out there buying, but it doesn't really seem like that's the case. Another indicator that he mentioned to me, which was, you can make the argument that it's slightly more bullish, is the miner position index. Okay, so if we look at this, so the miner position index, it helps you understand, if miners are selling or holding. So for example, the argument was, whenever you see the orange line right here, the miner position index, start to go past the 0 bar, the 0 marker, that means more and more miners are moving Bitcoin onto the exchange and possibly selling. When the miner position index is under the 0 marker, that means miners are still holding, or at least a large part of them are. And so technically, you could make the argument that this whole run up that we've had, miners have not really sold. In large part, they're actually holding. So it's not necessarily the idea that most miners are holding or most miners are selling, because there are some inefficient miners who are selling. But in large part, as per the miner position index, the data is showing us that we're not really having miners sell a whole lot. Because if you look at the tops right here, right, this is a 20,000 Bitcoin top. You can see the miner position index was way the heck up here. So the miners are definitely selling. Even at this high right here that we had around $11,200, the miners sold. All this stuff, in large part, the miners in large part were still holding. And then once we got the 13,000 high again, miners sold again. Even here at the bottom, 6,400 or so, this previous December 2019, miners sold. So the bullish argument is, okay, well, a lot more miners are actually holding still. The bearish argument to that is, if, let's just say, the price starts dropping, and again, we don't really quite know who holds the supply to actually keep selling, but we also know that miners have a large part of the supply. So if miners are not selling, but then there's other players that are selling in the market, well, the other players who are selling are probably also big players, big professionals. So if they cause a drop in price, that means you might see miners also start to sell or capitulate, because the miners have already suffered a lot when it comes to this big price drop right here, and then this grinding back movement up here around $9,500, yet price is not able to break through past this level. Because as I've said before, if you look at this Bitcoin production cost indicator, right, there's a big red block right here. This indicates a large part of the costs that miners are incurring, and the costs are anywhere between 10,000 and 15,000 up here. And this includes electricity, this includes rent, this includes mining equipment, insurance, all that stuff. And so the costs are way the heck up here. And again, this is not every single miner. I mean, in large part, it's a decent amount of miners. But if those miners cannot sustain their costs with the price of Bitcoin being where it is, that means they'll have to sell. And so if they sell and then there's other players selling in the market, we could see another big price drop, and then potentially more and more miners being forced to sell. I mean, obviously we don't need to dig into that all that much, because we have no idea what's going to happen to price going forward. But in large part, you could see the argument to be made of why paying attention to what's happening in the miner side, seeing what's happening at Bitcoin right here in terms of distribution, right at the tops of the range right here, tells us that it's at least best to be cautious about more bullish upside. Okay. Also, just given how overextended equities are, the stock market just being excessively overvalued. Obviously, that doesn't really matter because the market just continuously keeps going up due to Fed liquidity, but doesn't necessarily mean that it will translate over into Bitcoin. Okay. So that's pretty much it. Hope you guys enjoy this analysis. We have a 50% off discount going, so if you want to come join our Discord channel. The link is below in the YouTube description, and you can shoot me a message right here. All right, that's it. Cheers. Have a good rest of the day.